Good morning. Uh, we're in the holiday season, and welcome to today's weekly forecast. It's more of giving you a heads up than really looking for trade opportunities. There isn't much opportunity to look for at this time of the year. The year is rounding up. We're in the holiday season. Sorry for that. So what we see in the market for now is low volatility and low volume, and that is going to continue until next year. So we should not expect any big move. I want to say that going to the new year, you must make up your mind that you want to guide your investment. You want to guide your investment. That's the first rule, is to guide your investment, not to leave yourself open unnecessarily. Greed always come in subtly. Even when you know that, okay, yeah, you think you're not greedy, you think, okay, you go at your own pace, greed will still take the best part of you. Oftentimes, we'll see these as forex as highly rewarding. You shouldn't see it that way. You should see it as something that you do to make a passive income. But while you are making that passive income that looks as if it's so little, you are trying to dig in to understand how it works. And when you understand how it works, that 0.1 lot size, sorry, 0.01 lot size that you started with, if you have learned how to take 100 pips, 200 pips, 500 pips from it, safeguarding your investment without losing much, and that you have mastered that, okay, now you are at about 90% to 95% winning rate. And that is when you can now probably deploy more resources, to take more from the market. And that way, you have learned so much that you know that these are levels, or this is the way you want to deploy. And you can now begin to make so much gain within a month, a quarter, and like that. Initially, if it's $50 that you earn in a month, know that you earn it and you're not losing it. If it is 100, if it's 200, know that you're earning it and you're not losing your money. So gradually, your 0.01 on your 200 pips that gave you, let's say, $20. When you increases your stake of 0.01 to 0.05, and your $20 become your $100 on 200 pips. And that's the way it works. And when you increase it to 0.1, do you know that on your 200 pips, your money hands you $200. As simple as that. If you increase that to 0.5, your $200 automatically become $1,000. It's as simple as that. And when you increase to 1.0, you know what you're going to get. That your 200 pips becomes your $2,000. So, but don't look at how much you want to make from the market, because if you think you're going to make this much in the market and you commit a whole lot of your funds into it without really understanding how it works, you're going to lose it. And, you don't want to become a bad loser, and you don't want to eject yourself from this trading, because when you are losing so much, that will demoralize you. It will. But if you have mastered how to gain so little and you are going by that, it's good. Don't say, oh, something is wasting your time, because, okay, oh, I can't be wasting my time earning so little. But how much do you know? How much do you know about the Forex that you say, okay, you can't waste your time to earn so little? It is when you have deployed and you know more about it that you can say, okay, I can increase my stakes and make more money. So we must be determined that you are going to trade so relaxed, and that's the way forward. And you're going to make some determinations and resolutions on what not to do and how to stay disciplined in the coming year. It's been a wonderful year for me. And one thing that you can take also is that you tell yourself that, okay, this is the structure that is building, and you expect trade to come to your level, and it will never tip that level immediately. It will never, maybe until later. And if it's going to come back to it later, you've got to know. Ask yourself questions: has the structure changed for the price to come back to this point? Because if the structure has changed and the price is coming back to the point, don't think that, oh, what you had analyzed about 5 days earlier or a week earlier, that is what is about playing out. No. You must look at the structure and the wave pattern to tell if that is still in play or not. We're going to be looking at a couple of things on how to really improve your earnings and what you know. Let me quickly, this is US dollar index. I want to zoom so that we can see. And I released a video maybe 2 weeks ago thereabout, talking about this has been, on uptrend, and not until now that we are getting this price action. And this price action for me could mean that the most conservative way to deal with this price action here on the monthly, this is monthly time frame, is that we are trying to correct the old move from here to this point. Well, the first thing really is to look at the immediate structure. Don't let us get ahead of ourselves. The first thing is to look at the immediate structure. The immediate structure to be broken, because if you're looking at structure from here to here, this is one structure here. Here is another structure. Going up, we feel that this movement here corrects movement from here to here. So that is what we are seeing here. And that is how to look at structure. Then we have after this correction, we have this move again, and we see whatever is happening here as a correction of this move. So this is another structure here. This structure is more or less a correction to this move or a reaction to this move. Of course, we can say is a structure of 4. And these are probably done ABC of the third wave to finish with 5. And we now saw a structure of big 4, which is an A, B, C here before this 5. So it's always good to take it as if what we are trying to do now is a correction of movement from here to this point. Not until this is taken out that you will think that what we are seeing could be a potential correction of the old move from here, low here, to this height. But for now, conservatively, we'll take it as a correction of movement from here to here. And not that you are anticipating that what is going to build up is that we are coming so far down. No, it's not in your best interest to think that way. Now, having said that, on this monthly time frame too, we want to see that this move is the first part of the move, and that what we are seeing here, it's a correction of this move. Just like I told you, movement from here to here, a reaction of a correction, and movement from here to here, also reaction of a correction. From here up here, reaction of a correction, like a 1 and 2, and in within a 3, and to end a 3, and for us to have a 4, and to do a 5. So it may have gone up in like a 5-wave structure that you can see. Now, this is a correction to this move to the upside. How much of it are we going to take? I will tell if we are going to turn up again to start another move in a grand, bigger cycle. So it's a 5 waves that we can see. And is this going to build up to an ABC of the all 5 waves? But let's first deal with this first. So conservatively, like I said, we'll take this correction as an ABC to finish this to the upside, and that we want to do probably a C leg. If you see this as an A and a B, you probably want to do a C leg, and a C leg at least should be equal to the A. So A equal to C. And if it now begins to go beyond that, then we'll take it as it comes. But for now, that's how to conservatively do this. But in the meantime, let's zoom. What we want to see here, I might be representing some levels with yellow. You know about what they call a close and what a wick tells you about candle. It tells you here that the movement of price is sold to this point and they push it back. This doji now. Price, bought to up to this level, and the seller pushed it down and the buyers forced it back. So you have, because it's selling, you have it first open here, price pushed down and the push back, and it closed here. And this is where price open, they pushed it up and it closed here. So we have an open, we have a close for a sell. The open of a sell is from the top and the close is below it. For a buy, the open is below, the close is here. But of course, price made it above before they forced it down. The seller forced it down. So we know all of that. With that said, we are looking at these that we know that price had made an A, and in between here, we have an A, B, and a C to finish that, and that we are coming down. So in our attempt to come down the monthly, one of the things that will tell us the price is ready to break loose and go to the downside is how we navigate beyond the close here. So we can know that the price opened here and closed here, the price opened here and closed here. This is a major area that we have to now take out. So once we take this out, then we know that we are coming down. In the immediate close here, we can see the price is at that level trying to break now. In fact, it has broken it by a week, and we want to see how much of it we're going to take. But once we break this close to the downside, the momentum has shifted and we are going to continue to go to the downside. Are we still going to have a correction, a deep correction? We don't know. But we are going to continue to follow what is building inside. We know what this wave is telling us, that we are going to have an A, a B, and a C. Once we begin to break this level, then you don't expect that this is going to go into A, B, and a C before we turn down. No, you might not do that. but we see how we make. So I'm going to be using yellow. So let's see. I'm going to be using yellow. This is the first place we want to be. Want to see our price on the monthly. On the monthly, I'm going to be using this yellow. That's the first level. And the next level that we want to see price break is here. I think we want to see how it begins to break here. This and this. So that zone is what we want to map out. We want to map out the zone. So mapped out. So we see those yellow zone. The yellow zone is for us to break to the downside. Then we know that we are going for that out down. So that's on the weekly, on the monthly. So we turn to the weekly. We already know what structure is building. And looking at the structure that is building, because but for you to progress, you must understand the higher time frame structure and what is building. So we are conversant with this as an A and a B, and this potentially could turn out to be a wave C to the downside, or a wave 3 if it's going to get bigger. Now here we are moving to the downside, and is there anything for us to break in the immediate on the weekly? Yes, we trying to break here on the weekly. Okay, we are broken that. We are trying to navigate here, but where this is going to get to, this cannot tell you really. What is happening here cannot tell you. It is the structure that is building in here that will tell you where exactly this is going to get to, if you're going to have a big pushback or not. So we need to understand that. If you go to the daily, is there anything that we can see in the daily? Any information in the daily? Now, in the daily here, we are seeing a doji forming, but it doesn't really mean anything. So we are still going to be looking more into the structure of the monthly zone that I just draw on the yellow. So let's go to the 4 hour. Okay, let's go to instead of the 4 hour time frame. Now, inside of the 4 hour time frame, I'm going to bring out my drawing, the way we analyzed the other time. The drawing is out. We are seeing the yellow. So we are almost getting to the yellow here. Okay. And we know what has built here. What has built here? So you can see the region where we look at the yellow. Now, the monthly time frame is just to guide us as to the area of support or the zone of support has to be broken before we know. But see, in as much as we are doing this, the knowledge of our wave count also will now come handy to look at what exactly we are expecting from this market. We said that we've had a 1 and a 2, and this is a 3, and this is a 4. And here is a structure to break to the upside. If you're going to have a deeper correction, if this one is going to be a 3-1, a 1, 2, 3, 4, 5 of a 3-1, and an ABC of a 3-2, before we turn down. If we do that, it's going to get bigger to the downside, but we still don't know what structure is going to give us. Having said that, we said that this is a 3, an A, B, C of 4, and that this may be turning out to become the 5th wave or the last wave before we have a bigger push to the upside. But what we do know is an extension of or a retracement of 3 to 4 to the downside or extension If it's still 5, should not be more than a 161.8 of 324 to the downside. And that will still mark up like the fifth wave. If we break beyond that to the downside, it may just be that the wave is still, continuing. We might not be seeing a bigger correction to the upside. So, and let's look at what that once we have 61.558 is from 3 to 4. 3 to 4. From 3 to 4, price at take 161.8, and it has broken it slightly. And that is on US dollar index. So it's looking like ultimately we may be going more down, but maybe not immediately. We may also be correcting, I'm going to tell us the way we're going to apply ourselves when we are thinking about the possibility of what is going to form here. If this is as broken 161.8 on US dollar index, and just like we said before, that there's an area where we feel once the price breaks to the downside, we are going further down. And this is the area of 85, which forms almost the lower limit of that support on the monthly time frame here. If the price should get here, then it's going. So we can see how the monthly analysis of looking at the monthly support area has also helped to, almost coinciding with 85. And we want to see how price gets in here. It's a very dangerous area for price to get to. If we get here, it means that we are going all the way to break down. So this may become extended. And if it becomes extended, it might now be extending your width 3, 4, 5. So which means that if it becomes extended, and these are the things that we don't know. We think wave, because we have the knowledge of Elliott wave and structure, and that, price is going to, play exactly way without thinking of an extension. If this is going to continue to break down, you are going to recalibrate whatever is happening here as still part of wave 3. That means we have not done a 3, 4, 5. You are still doing it can become a nest and begin to extend your wave 3 beyond what you think. And so that way your 4 is out, your 5 is still out, you are still within a wave 3. So these are things you must know, because you must know the variance and what to expect when you are counting your wave. And if you are counting it like a robot and it says it's 3 and it's 4, you must know when your 5 is out. Well, this is not 5 anymore. That means we're not done 5. But if it begins to push up to try and knock this as an ABC to the upside, then you now know, okay, yes, I can probably count as 1, 2, 3, 4, 5 of a bundle of 1 and do an ABC that will not break this level and begin to turn down again. So it could get extended. You must know that. And it's looking like that on US dollar index, that this may get extended. And the way we're going to apply that later, I will teach us on US dollar, Euro dollar. So let me take this out and let's look at the option that DXY is giving us. We're still going to go back to the monthly, and that was the way we started. The monthly DXY. So let's look at the DXY in the monthly. So looking at DXY on the monthly might appear almost the same, but you know what it is. The count and all of that is the same, from here, okay, not from here. It's different from the DXY before we have US dollar index. We didn't have all the information from here down to here on the US dollar index. We do have from here to this point. And so if you're looking at the DXY, you may think that, okay, this may actually go down and break all the bottom. Do you understand? But like I said, conservatively, let's think about here from here to this top for now. Now, the monthly structure, if you look at here now, this has been broken here, unlike we saw with US dollar index. This has been taken out. So the area of interest is not here, is now here, which price I've gotten to, and here, which is the last where you have this week. That's the area we're going to concentrate on the monthly time frame here on the XY. So this area ticked, then, and this area where the price is at now ticked. So that's the zone we are going to rely on, not the last, not this point. Here is a major close. So once you break a major close, it's telling you that this is spin to the downside. That's a major close here. It opened here, it closed here. And that's a major. So it's now in a way done with this. So we are between here and the week. The last week here, tells you it's not this one. So this one will not hold the price. So we are seeing it going down. Of course, it's not about the week. It's not about at what point of the week it's going to go back. No, it's when you now go back into the structure, then the immediate structure, then you now understand what is building up. So we have that zone already. Let's just switch to 4-hour time frame straight because it's almost the same. Now, this is the 4-hour with our drawing. So we can see that it has already pierced that zone, the fourth zone, the support zone on the DXY, unlike we saw with the US dollar index. So the support zone is pierced, and that's what we can see here. Now, looking at this one also, the last support zone, of course, is almost hitting. This is 85 here. So the price is almost doing from here, from the beginning here. Let's see how much retracement we've had to the upside. Oh God. So we can see that price is almost touching 76.4 on DXY. And your 85.4 is just a little below that yellow line. You can see we are just trying to guide ourselves on trying to look at the monthly support area zone that has to be broken. So the price has extended into heat. So I won't be surprised if this thing begins to grow and knock this off as a possible the end of 3 and a 4, but it's going to get bigger and making this one a nest. We might still be inside a wave 3 or not. But of course, the area that invalidates this as wave 5 is what we are interested in. So the area that invalidates this move as a wave 5 is what we are interested in. And we're going to be looking at that. Of course, it's invalidated first on the US dollar index already. So from 3 to 4, it's right on this black. So it's almost getting invalidated here. So we need to see The direction of the move for now is still to the downside. Okay. And but these are not levels you want to pick a new trade. No, 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 no. These are not levels that you want to pick a new trade. You rather want to see a major pullback or a major correction to the upside before you want to sell again. It's not advisable. So if you understand how it works, this is not area you want to trade, except you have your trade, right from the top here to the downside. So this can become a nest and extend your with 3 beyond here. So we are almost touching here. Once we break down here, then this might not be your with 5 to get a bigger reaction to the upside. It might still be part of wave 3 that we are counting and we're running into a nest. So that might change the entire structure here and make this one like a 3-1. A 3-1. And this might just be a 3-2. And we might just be inside of a 3-3. It can be anything. So you must understand how wave, forms. And when you are trying to lay out your structure and the pattern that you are seeing, and once one is invalidated, then you know that it's going to become a nest. But for now, if it's still going to work as 1, 2, 3, 4, 5, as we thought, then it's going to react around this area without breaking this area. It may break it by fringe, then have a deep correction. So if you have that, is an opportunity for you to look for a sell. Don't think that you're going to get reaction here. Even if you get one and you think it's going to go all the way and break the top, no, I don't think so. So you are waiting for that reaction when you get it. Now, so we can see what it has given us. We are almost at 78. And once we cross this area to the downside, we are going all the way to break the bottom. So if we don't get reaction any this area, once we try to break this area, we are going to get a reaction that's going to give us a deep pullback to the upside for us to catch another sell. So just wait for it. Just wait for it. Now, let's now look at Eurodollar because it's similar. We are looking at Eurodollar next. So we are looking at Eurodollar. You can see the style I'm building, for you to really understand and how to make something out of here. That's how to do it, really. That's how to do it, really. So this is just like an inverse of what we've been doing. Of course, I said what we are aiming to correct for now is the move from here to here, and how much of it are we going to take? Are we going to take 100 or more? Let's see. We'll see with time. But that is going to be the possible area of 100 is still something that is big for you because I'm going to tell us. Let's look at the zone first. This case now is going to be a resistance zone. A resistance zone now. Now, we can see that, in fact, the price had broken this area and it's at this point. So it's more narrow here. It's more narrow here. It's more narrow here. So we are going to still use that yellow. We're going to use that yellow on the major close, which is around this area. That's the major close and open. So we have that yellow. Then we're going to look at the major area of a breakout of this monthly at the week now. So this is not what we are interested in, but these areas are clustered of weeks 1, 2, 3. So we're going to look at that also as a zone to break out from. So I think I'm on it. Good. So we have mapped out those zones. Now, before I continue just for what we want to see. We want to see how where 100 is going to reach at least as an A and a B, which is the low of B, and where 100 extension is going to be. So let's look at that 100 extension. And I'm going to use maybe a lemon green to map that out. So from this low to this height and back to this low. So our 100 extension, actually, I'm going to use this lemon, is going to be here. That is 100. So we are still riding very close to 1.22. We are at least going to get to that point. So it's going to be huge. So I just want us to know. So we still have, from where the price currently is, to this point, we still have very close to over 1,000 pips in the upside. So it's, but you don't start to think that the price is just going to be running in a straight line to get to that point. No. And that is the beauty of what we now know, that it's not just going to be running. And if you think you can just, at any point in time, because that is where you are going, you want to enter at any point in time, you'll feel sorry for yourself when the price moves against you by 200 pips and wipes you out. So we are trying to build something here, which you must understand how it works, the fractal nature of this market. We are going to go straight, just like I did with the other two instruments, into the 4-hour time frame. Like the 4-hour time frame structure of the DXY and the US dollar index look similar in terms of we are trying to look at wave 3-4 pattern, for further decline to the downside. But on the US euro dollar, it's not like that. Like I told us that this, it's not with 3. I mean, so 3-4, it doesn't look like that. So if I bring out that drawing again, so we had said that this will be a 1 and a 2, and a 1, 2, 3, 4, 5 of a 3. And if that is the case, we are trying to see that this is probably a 3-2, which may look like a 3-2. Because if you look at it as a 3-2, right from here, or you may see this, if we go inside of a 4, let's look at RSI. If this is like a 5 and this is like a 3 here, let's see, RSI. Now, this may look like a 3 out of 3, and this is 5 here, and there is a division here. So we can still call this a 3-5, then which makes it look like a leading diagonal, and we came down to do a big right to the downside, a correction to the downside. And now, see where this has gotten to. We are almost back at that here. At this point, we're almost back here in terms of RSI trying to break. We are breaking the limit here, and we are trying to break up. This looks more like we are going further up. It looks like we're going to get a nest of this wave, and that the DXY and the euro dollar and the US dollar index will not be backing down. That's the way it's looking. But having said that, our best approach here is still to look at this as a 1, 2, 1, 2, 3, 4, 5, and that this is a 3, 2. So the all of this could become a 3, 1, and this could become a 3, 2, and we are going to have another move. Again, you must also know that this can become a bigger correction. So if it's going to become a bigger correction, that would tell us that this is still looking to the upside. We may have a correction that will go all the way to come and break this bottom. Even if that happens, the direction of this trade is still to the upside. Now, what we want to see now is that what we are looking at here, it has broken the top now. Is it going up as a bigger wave and not going to come down to correct? That is one thing we have to figure out. See the way they can trick you. And they gave you this movement to the downside, or you think is a price action for you to sell the more. Not until you look at the bigger picture that you will see that, oh, this is not going to get a deeper correction. You know, you can begin to suspect, because the way you will suspect is this. Let me just show you. Because you don't jump into any other trade, any trades anyhow. We have looked at the RSI at this point and this, and we are seeing this as a correction. And rightfully so, it came down as a correction to this point. And anybody could have thought that this would just give you an A, B, and a C to the downside for a deeper correction before you turn up. But they didn't do that. The clue also here to tell you that this is not going to, you know, be a correction to this is the way and manner this went up sharp. It's quite impulsive to the upside. So, and I don't expect this to be, this one is not a 4 for me anymore, because that's gone beyond what a 4 should be. Because if it's going to be a 4, a big 4, this is where our 2 is. Then if you look at that, these are things you don't forget what you know. Then you come back to this top, and this is a 50. If it's going to be a big 4, it shouldn't have run below 38 here. So that has knocked this to be a big 4 here on the euro dollar. Then again, if we are talking of a bigger correction of the old move from here to the upside. So, and if we take it up again, and this is just a bit over 50, which will still take a 2. So it could just be, the all of this could just be a bigger, a 1 and a 2, and we are going further up. It could just be that. But wait a minute, you don't just rush to think that is what it is. You must still think that this may be a possible A possible B, and we are still going to turn down, not until the dynamics changes up there. So once we break beyond what we think B wave should be a correction, when we break beyond what will take a B wave to still be part of the correction, then now we can now begin to look for, you know, a deeper correction, a deeper pullback for us to buy. Now, what I'm trying to say is that if we know that this wave that came down could be a possible A or a possible 2 for more upside, and this wave that is going up is very important for us to know at what point these will not be part of corrective wave to this. And that is where you now begin to, once we break beyond that, then we now know, fine, anything that we now get here is a correction, a new wave is building. So how do we do that? What we do is to still see this as an A and a B to the upside. And in case we are thinking that way, we are saying that from here to this point, we can still see that 1, 2, 3 is at the fringe of the lower, the upper limit of monthly resistance here, which can still send this price to the downside. And the price should get here already. It's at the edge. Here is at the edge. Let's see where that, what it gives us there. I think it has broken, it would have broken the top that way. Let's see. It would have broken the top at this blue. This 161.8, it would have broken the top. Let's see on the daily time frame. Now, this is where the blue is, okay? Of course, it would have broken a primary 2, not the top. A primary 2, which would have told us the price is going up. Of course, that primary 2 now will be, in terms of a correction, we all move. So, yeah, it would have actually broken 85 here. So 85 is as primary 2. So if you are broken 85, that will tell you it's looking up. Yeah, it's more upside. The old correction here is yet to get to 76 here, unlike we saw with the DXY and the US dollar index. The mood of the market on the daily time frame here, of course, we are seeing that we are broken the top, and this doji may still be part of correction. This as an A and this as a B, yeah, is not the immediate thing we're going to look at now. We're going to be looking at the possibility of the correction inside of here as a possible A B, and a C, not in relation to this one. We first had to take out this correction out first before we now begin to think of this as a possible A and a B to the upside. That's how to look at it. We first had to take the immediate correction here that we are seeing out as a possible correction for more upside. This has to be our A and a B and a C. When that is taken to the upside, then we cannot begin to look at this also as a possible A or a bigger B on a daily time frame. That's how to look at it. So going inside of this as an immediate correction, this one now. Let's look at 1 hour time frame. Well, let me start with 4 hour so that you can see the structure. Okay, so this is the same structure of the bigger A and the possible. I'm not calling this an A. It could be a 2. So this is a bigger one. So we're looking at this as a possible A now and a B, and for us to have a further C. Because that's the most is looking like. That's the most is looking like here for more further upside. And when it's coming down, you know, if it pulls beyond this as an A and a bigger B, then you know that you can continue to allow your position to go. But once it's turning down and it's getting you a reaction up there, you might need to close your position that you took above this level for you to see if it's going to get a deeper pullback for more upside. That's how to take it. So let's bring our drawing. We already compromised the first monthly resistance zone here now. On the 1 hour time frame, so we are still seeing this as an A, and an ABC of B is possible. So this as an A, not from the bottom here. This it will be a place to first knock out now. So this as an A an A, B, C, or B possibly. We want to see how we go up there. The price had broken 100 here. So 100 is taken already. And we are seeing this price will not just do this. It's just a further correction to go up, really. And that is what we are seeing here. A further correction to go up. This is 123, and this is 161.8 of this immediate move. And if you don't know, let's go there. From the top here, we have the blue down to the area here. So you can see, okay, I think probably a bit lower than that because we're looking at this. Okay, so let me correct that. 100, of course, 100 is taken, and the 1, 2, 3. This is actually reacting at about 127. It's reacting at about 127. So about 127. So we're going to see how we're going to break this. And this is 161.8 now. That will be at the edge of the monthly resistance, which is here. We need to see this out first. We need to see this move break out of here. And once it breaks out of here, then it is not a potential A, B, C. But if we get reactions around this area, we are going to treat that as an A and a B and a C. So if we get reaction around this area to the downside, then you should be expecting your C to break this low, just this low, not the low below. So just this low, if we get a reaction here. So we are going to see how it's growing and developing. That's how to really, trade. You look at every possibility of what the price is doing. You start with the higher time frame. So we are going to go and look at gold. Gold on the monthly time frame. And we're going to end there. Gold on the monthly time frame. Now, gold also, we had said a couple of things on the monthly time frame on gold, seeing the structure growing to a bigger 1, 2, 3, 4, 5. So that is what we have said on gold. We are taking these as our 1, and these low as a 2, and these as a 3, and these as a 4 in the bigger cycle, okay? If I come again on the bigger cycle, I say these as a 1, these as a 2, and these as a 3, these as a 4 on the bigger cycle, and on the grand cycle, and this is as a 5 going. So we are seeing a 5 structure going. So this is the 5th wave. But inside this 5th wave, we are still going to see this as a 1 and a 2 and a 3 and a 4, and we are going to do 5. I want to, did you get that? Let me try and do something for us. Let me do something for us. I'll be changing the color here. So that's 1. Let me use black here. So, and a 2. Just to come to it. Everything started here. So This is where your 2 in that bigger cycle is, and this is your 3 in that bigger cycle. So, and that is your 4. That is your 4 in that bigger cycle. So if we now use black, say this is 1, black, and black. So that is 1. And let's give it a border. That is 1. Good. We are going to have a 2. We're going to have a 3. So you need to see what we are looking at. And that's a grand cycle. A 4 and a 5. That's what we are looking at, a grand cycle. That this is a 2 here. And that this is a 3 here. A 3 here. A 2 there. And a 4 here. And that we want to see a 5. Now, trying to see a 5 where the black can fall. We take it from here. Where the black can fall. The black will say, may hit this point if it's ever going to get there. So the black may hit that point if it's ever going to get there. So I want to believe that we are taking that. So maybe in the immediate structure, we can now change this to blue. So, or green. Let me use the color green. Okay, so we've done 1, 2, 3, 4, and this is with 5. And that also is divided into 5 loops. So that's what we're saying now. So looking at the immediate structure there, let's use a black. Okay, so using a black, and that can guide us. You should not expect price to break out of this. Price is winding down for a bigger correction to the downside. But when, we don't know. So we need to see the inside of here now. I will say this is 1 and this is a 2 and this is a 3. If we use, then I'm going to be changing this. This is out. And I can turn this to a green because we are using a dirty green now. And the dirty green gives up a 3 here. Okay. And the dirty green takes a 4 here. Okay. So within that 3 to 4, we are saying that for the dirty green, because you can see where the black is, where the 4 is here, and you are seeing 1, 2, 3 of the dirty green. So we are calling for a 3, 4 at least to the upside of the dirty green. And what we should be looking for is really an 100. So the dirty green take this out here. So the dirty green is here. So which means price may react before this black or not, or price may react within that zone. So we're just plotting all of that. So we are seeing this as a potential area where price may just rescind and begin to wow. And so let's take out this. Okay. Let's take out. What I want to do for now also is to the same way I looked at the other instrument. The major area of the price is trying to break now. This is a major resistance area on the monthly. The price came here the first time, the second, and the third time. The price now broke above it. That tells us the price wants to go up higher. Now, in price going up higher, so this area is we want to see our price close properly above that area. So we're going to draw a zone now using our yellow. That's the height there. So I'm going to use yellow. That's the first height. Now the second one will now be where we see this bullish wick. The price is exactly there right now. This zone, the price is exactly there right now. So with this said, we know what it is we are dealing with. This is a 4 on this particular cycle. On this 1, 2, 3, 4, and going to 5, not on these. On these, this is 3 and this is 4. And on this 4, we say 1 again, 1, 2, 3, 4, 5 to the upside. So let's go and look at the daily straight. Or if any information on the weekly time frame. On the weekly time frame, we are immediately going to see how we break this. Yeah, how we break this. Let's bring the drawing out. In fact, we are breaking it already. We are breaking the first resistance zone already again. We are breaking it again to get here. Price got to this point before we had that retracement to the downside. So we are breaking it already. Let's look at the daily time frame. Any information that we can gather. On the daily time frame, we are seeing this as a push to the upside. Now, we know that gold is still looking up, and gold is not coming to break this bottom for now. And I don't think gold is coming to break this bottom. Gold may still break this or not. It depends on how this one is going to go up. So the way Amana will get a price action around this area for further downside will tell if we are going to go up or not. I want to look at this daily time frame, and let me bring out how the resistance, the RSI. Bringing out the RSI, let's first look at the monthly RSI. So looking at the monthly RSI, from here, this is what we've been doing now monthly. The weekly RSI. So this is the height of 3, and this is the height of, this is 4 here, the low of 4, and we are going up again, testing that height on the RSI of the 3, 4 for the further upside. So now let's now look at the daily RSI, the immediate daily RSI, where we are presently. So looking at this RSI, where we are, this is the height here. And looking at the height here, there's no divergence. I can see no divergence here. If you are to see a divergence, that tells me we are coming to an end. It's almost forming equal height with it. So if this one had gone up the way it went past this area, and the price had tested lower here on the higher side, that would tell me that I think price is going to come and break this low. So there's no divergence. It's more like a corrective pattern here, the way it is. Maybe an A, a B, and a C. The way this has done, it may mean on the daily that we are done correcting A, B, C. That's the way it's looking like an A, B, C here, but it's a tough call. Okay, it's a tough call. But the way we're going to align ourselves actually is to see this as a possible 1 and a 2, and that the move here, because this one went up as a 5 waves, like I said, look at it. On the daily time frame here, this had gone up as a 5-wave structure, a 1, 2, a 3, a 4, a 5. And this came down as a 3-wave structure, which is corrective. That is what we expect as an A, B, and a 5-wave correction of C. And this also went up as a 5-wave structure to the upside, even though we are seeing a sharp reaction here. So this to me is corrective as an ABC correction. And this C part came down as a 5-wave structure. And before this up move. This up move is what we had to see. Is it going up as a correction? Or is it going to develop into a motive wave? So it could go up as a correction, as a B, and come down to take this low again as a C to the downside. If that happens, they're going to eat food to the upside. That is what. But if it continues to go up and up and up, it may have finished this as an ABC, and that's all to it. So it's still 50-50 around this area, and testing this area now is about testing the daily resistance where we had closed whatever here. It tested this area for now. And this area coincided with, see, almost taking that height again. almost taking that height again. So we can see, let's see how price will navigate here first to know if this is going to continue the move and the correction is ended, or is going to come as an A, B, and a C to take the low before it goes up. So if it reacts to the downside from any level here, it's going to break this low. It's going to break that low as a 5 ways to the downside. But of course, we know A, B, and a C, this may have ended correction. We are just saying it. But the way this is going up, these have gone up as a 5 waves to the upside on the lower time frame. These have gone up as a 5 way to the upside. Now, on the daily time frame, this may give us an A and a B and a C. Yeah, it has given us an A and a B and a C, and it's pushing up. This movement to the upside, we need to see that this one is beyond correction and is going to grow big again. So that's what we need to see now. This is a 5 waves on a 4-hour time frame to the upside. But it will end up giving us a 3 wave on the daily time frame. Taking this as an A, the whole as a B, and a C. To finish this as a B, an A, B, C of it as a 5 waves, and turn more down. If that happens, we'll eat food. So I want you to see the possibility of what could happen to gold here. So that it may still come down to take the low if this one does not push beyond correction. So if it's going to push beyond correction, so we're going to see this as a possible A and a B and a 161.8 between 100, 123, 161.8 before it turns low again. If that happens, then you know we are coming down to do a C as a 5 wave structure. But if it breaks beyond 161.8, then we are going for that up. So that is what we are going to focus on now. We are going to be focusing on this daily support area and this resistance area for us to navigate further. So let's quickly draw that out. I'm taking more time, really. Maybe it's good for you. So we're going to see that technically, take this as an A, B, and probably see this as an AC if it's not a continuation of a new wave. So if I bring out my drawing and to see where we are going to land with that. From this low as an A, this height as the end of that A, and back to this low as a possible B, then it is going to grow into a trend. This is 100 here. We want to see tick 100 here. It's going to tick 100 here first and go up. Okay. Go up to do a 1, 2, 3 here. I think right exactly on 1, 2, 3, and go up to see how we tick 161.8 here. So anything in that area, this is an 100, a 1, 2, 3. So beyond this area, it's a new wave to the upside. So we are still, we can see that it could be a zigzag to the upside to turn more down to give us a C. If it happens, anywhere around here, and we begin to break structure to the downside, you must know what you are doing and how you will take the advantage of your trade. That is what we're saying. So it could react any moment from now, but you want to see a break of structure to the downside. It could even begin to react from here. But I would think that it should, at least with what she has done so far here, it should at least get here first before we turn down. Or we look at the corrective format here to see where this one is going to react to the downside. So we are looking at all those possibilities. Okay, what I've said in a nutshell is that this one could be an A, a B, and a C to the downside, or this one could have just been an A, B, C finish, and this one is going further up, to break the top one more time. But we are not done with our movement to the upside. That's what we're saying. We're not really done. Before we can say that we are done, we should at least do an 100 to the upside. What do I mean by that 100 to the upside? What I mean by that 100 to the upside is we have said that in the new move, I want to go bigger for you to see. Yeah. We have said that this is a big 3, this is a big 4. And we have said that in a new move, this is a 1 and this is a 2. Okay. This is a 1 here, an ABC of 2, and a 3 and a 4. That's our new move. So if that is our new move, we know where an extension of what this 1.8 to the upside will be. So what we want to see first is, are we going to get an 100? Take an 100 from here to this point, to the upside. At least an 100 from here to this point to the upside. So that's what we're trying to say. So let's go back there. So an 100, 1, 2, 100 extension to the upside. That's what we're saying. If that will happen, will give us an 100 to the upside as a minimum. As a minimum, an 100 will be here. An 100 will be there. So we can now begin to see where our 5 on the green will be this area, and the 5 on the black will be this area. We are almost approaching it. So price will get to 24.60 or 23.55, but we are still holding the view that price should at least take 22.70 area before we see further decline. So this price will still go up if you're going to have any bigger ABC, but we need to pay attention to the immediate structure that is being cooked. So looking at the immediate structure that is being cooked, in terms of what we expect, we go to the let's look at it again. we actually need to deal with this first as a possible ABC. We need to deal with it. If you're going to look at that as this as an A, a B, and a C for further upside, if we go inside of a 4-hour time frame, we said an A, B, and a C for further upside. That is what we are looking at now. So that further upside we said is an 100 or 1, 2, 3. We are getting this reaction now. Let's bring out our drawing. The reaction now is still around this area to the downside, because this may look like an ABC of ABC, or that we have done this as an A and we are seeing this as a possible B within this time frame here, 4-hour time frame. We might see this one as an A because it broke below the primary 4 here. We might see this as an A and the entire run here as a B. If it's going to be a B and we're going to have a C. So once we have a C, we're going to push up again. So we should be looking at that possibility. If we break structure here without touching on 100, if we don't touch 100 here, because we are looking at this 100 as a possible corrective wave format here, A, B, and a C to break downside. If we don't touch 100 here and we correct and we are going up, we may break all this to the upside. So we are seeing this first as a possible A in the immediate, a B, and a C. So if in that case, we may see this as an A of B, a B of B, and this as a C of B. Now we need to break structure to the downside for us to know that that is what it is. So that's the immediate. In that immediate, let's look at 1 hour in that immediate. In that immediate, so if this is an A, and this is going up as a B, in that immediate, we have to see if this is our A, this should not extend beyond 161.8 to the upside if it's correcting this as an A, B, C, and not that the entire run here as an A, a possible B, and down to have a bigger C. So let's look at the correction here and see if it has not run beyond what we would think from here, the top of that deep blue of 5 down to here. So price broke 161.8 slightly to touch this area. Now, it may mean that this is the end of a B, of an A, B, C of a B, to correct in that format of A, B, and a C to the downside. And if this is going to come down, it's going to break low and test 1, 2, 3. And so at about 1, 2, 3 down to the downside, they're going to take a buy. So it means it's using this as an A, B, C. Once it takes low of here. So we need price to break here first. Price should break here first. Yeah. Price should take this structure here. So that means this top has to be taken to the downside and break this trend. Once this trend is broken to the downside, then it is an A, B, and a C. At a 1, 2, 3, price is going to bounce up again. So you can take that. Once you break this trend line or you break this structure, don't look for a sell. Just look for a buy. Wait for your buy and buy to the upside. That's what you can do on gold with what I'm saying now. Because if it now begins to go up again, we'll now turn all of this. If this breaks this structure to the downside, And we're going to look for 1, 2, 3 is now going to look like this. I need to show you. If you break that structure to the downside, a 1, 2, 3 is going to break this, take this low, and a 1, 2, 3 will be around this area. In fact, it's going to be around this area. A 1, 2, 3 will rest exactly here. Will rest exactly there. So let me make it very big. That is what 1, 2, 3 is going to be here, exactly there. So which means price may be coming to this point. You need it to break this structure, to break this trend line. And if you want to sell shortly, look for a push or a pullback to sell to this point. Don't take too much of a risk. Anything can happen. So it may not break this structure and continue to go up. But so far, it's looking like price may be coming down again deep to this area of 2022 for you to get a buy again to the upside. So, and if that happens, then we'll be looking at how price will nullify these areas to the upside. Because potentially that will be a big structure that will break the top again. Because if we now have a bounce down here and breaks this structure to the downside, is going to go up and bounce up from here to the upside. It won't break this area, this zone. Price will not break this zone before it, if it breaks this structure here, it won't break this zone before it bounces back to the upside. And in that case, it's going to be big to the upside. As an A, B, C is going to break all this structure to the upside and break this top. That is what it's going to be, except if it's getting reaction around this zone. And if it's going to now get reaction around this zone, that means it's going to turn this as an A, B, and a C, and it should now break this place and break this bottom here. But for now, we are not calling that. What we are calling in the immediate is the possibility of these breaking this low here, bouncing back here to break the top. That is what it's still looking like. But once we take this area to the upside, it's not coming back down. But if we get the reactions around this area, then it's going to take A, B, C, break this low and go up. That is not what I'm saying presently. I'm saying an A, B, C to bounce up from here, or that price will not even break this and continue to go up. So we need to wait and watch what price is going to do. And that marks the end of today's. It's been a long training. I hope you enjoy it. Please like, share this video. If you like the content, please comment positively for others to, enjoy this teaching. Thank you.